We're now less than 6 weeks away from tax day. April 15th will be here before you know it. And if filing taxes isn't stressful enough, today we're talking about something many of you may have done last year that will make it even more complicated. That's buying or selling a home. We're joined today by Charlie Heid, an accountant. Charlie, a lot of people are sitting on the sidelines. They have those big homes. The baby boomers have those big homes and a lot of equity in those big homes. There's nothing out there to buy and the interest rates are terrible. But at some point, there's going to be a big log jam that'll be freed up and they'll be buying the villas and the condos, things like that going down, and they'll have money left over. And that's where the tax man comes in. So how does that work? I was aware of this, but the particulars of it, how you file and everything like that. So let's say, throw this out there, you sell a home for about $400,000 and maybe you'd clear $300,000 and you're going to buy a smaller home. Walk me through how that goes.
Yeah, so I think the first big surprise is anyone selling their personal home at, in your example, at a $300,000 gain, they're going to pay tax, and they're going to be shocked about that because what do you mean? It's personal. Yeah. It's not a business asset, and it doesn't matter. It is a personal home, but it's a capital asset, and therefore capital gains tax applies to it. So that $300,000 gain is going to get taxed. However, there are some things that people need to be aware of. One, tax code encourages home ownership. There's a very relevant tax code section that is relevant to this, and that is Code Section 121. You can exclude a portion of that $300,000 gain and not pay any tax on that.
Well, for example, if you bought the house and you've been paying that mortgage down, you've been paying that mortgage down with your money. Okay, after taxes, you're paying it off, and you may have thrown a lot of money into the house to improve it, things like that. How does that all play out?
Yeah, so anything. You know, you bought the house and you took out a loan to buy the house. Well, the purchase price is what it is. You've been paying it off with a mortgage. That doesn't increase your basis. But improvements, that does. So if you put in new windows, a new roof, a new driveway, did an addition on the home, all of those things add to the basis of the home you purchased. So if I purchased a home for $250,000 and I put new windows in at a cost of $40,000, I've now got $290,000 in basis. So when I go to sell, and let's use your example of $400,000 was my sales price, and I sold it for, my basis is $290,000, I now have my gain of $110,000.
What's the tax rate on something like this?
So the tax rate, it's capital gains rate. So it's either going to be 15 or 20% based on somebody's taxable income.
Stunned by that. Stunned by that.
How so? About the 15?
Is that much? If you turn around and spend that on a home, does that negate the whole thing, or do you still have to pay tax on the cash? If I'm not pocketing the money, I am turning that money around and buying a home. Let's say I make $300,000. I'm buying a home for, let's say, $250,000. You can make deductions, $250,000 or so. Am I free and clear there, or how does that all?
So the answer is no. It has nothing to do with you turning around and taking that money and buying into a new home. This is where the exclusion under 121 comes in, the code section. So if you're a married filing joint, so you and your wife have lived in that house for 5 years up through the date of sale, so they look back 5 years, and in that 5-year period, this was you owned it and you lived there as your primary residence, you can exclude $500,000 of gain. So that's going to take out a lot of what you were thinking about as, wow, that's, I have a $200,000 gain, and what do you mean I'm going to have to pay tax on that? You won't have to.
Okay, so what you're saying is, Dan, get off the ledge. You don't have to jump.
You don't have to jump.
What a big relief. You buried the lead there, Charlie.
You
Boy,
know-
so many questions, and boy, April 15th is going to come. We want to make sure we get you in here as we get closer, because there's a lot of questions that people might have that maybe they can send messages, and we'll ask you on the fly there. So
Yeah, that'd be fine.
appreciate your time today. As always, you want to consult a tax professional like Charlie Heid.